Okay, good good day, good afternoon, wherever you are. Welcome to today's series from our lectures on forex market. So I'm very excited right now, super excited. Um, so much for the lockdown. Yesterday, I made over $100. I made precisely 118 US dollars. I made that from the forex market, sitting in the comfort of my home. It was good. It was good. And even today, it's not even up to 2 o'clock, 2 p.m. here, and I'm already up about 55 US dollars. So there's a lot of prospects in the market, even though there are days where I have made my loss. But the key is the profits, your gains should supersede your loss. That way you always come out profitable. So quickly, ignore the screen. This is not for the basic class. We'll get here when we get to the advanced phase. So from the series of lectures yesterday, I ran through some characteristics of the forex market, its unique features, and also briefly I talked about this. If you've not seen the last video, please go back and see the part 2 of this series, so you can refresh your memory if you can remember some things we discussed about. So basically, I try to explain that what is traded in the forex market is simple. It is the price movement. Price movement is how you make your money from the forex market. The change in the prices of different currencies. I made an example of the US dollar against the Nigerian naira. Made an example of the Great Britain pounds against the US dollar. Another example between the euro and the US dollar. There's a lot of them, a lot of pairs, a lot of commodities, the price of gold. Yesterday, OPEC had a meeting. Crude oil price was there's some Russia and Saudi Arabia agreed to cut down supply. So a lot of things happened yesterday following that OPEC meeting, which determined the price of oil. So basically all of that movement, that's where you tend to make money by trading in the forex market. So quickly, I also ran through understanding the forex quotes. I believe we will all understand that now. If you don't, please refer to the previous presentation on this channel to understand it better. Basically, remember I talked about the quote currency and the base currency, exchanging one for the other. That is it. That is as simple as that. But I said in I think my first presentation, there's a lot of like where I learned the school of forex I went to. There's a lot of things they'll tell you, they'll teach you. But I'm skipping a lot of them. I'm trying to go straight to the point as much as possible. There's a lot of details. Someone was saying talk about the history of the forex market. Who now I help? What do you need to know the history of the forex market for? Let's get to the point and show you how to make this money. Remember, once again, this series is absolutely free, starting from the basic all the way to the advanced level. This channel is going to continue running. I'll share opportunities at every point in time, every opportunities to make money. So I'm here to stay. So once again, go to the next presentation if you don't understand the forex quotes. I explained it in my last class. So quickly, I was about starting this when I remember I forgot the slide and I had to go back. So trading the forex market, how do you make your money? Now we are now going a bit in depth. Remember I told you it's basically from buying and selling, which is the various price movements, the change in the price movement. Today the dollar to naira is 380, tomorrow is 360. It used to be 150, it used to be 180. So that fluctuation, that is how you make money. It's that simple. So one term you would come across in the forex market is the bulls and the bear. The bulls and the bear. So you see this continuous struggle between the bull and the bear. I'll explain the bull and the bear, but the continuous struggle, that is what makes the market move. The continuous struggle. Now, what is a bull? Who are the bulls? The bulls are the buyers. The bulls are the buyers. When you say the US dollar against the Nigerian naira, since when I was born, it has always been a bullish market. It has always been a bullish market. What does that mean? It has always been going up. And once market is going up, it means the US dollar against the Nigerian naira is buying. The US dollar is appreciating against the Nigerian naira. It has always been that way since I was born. So it is a bullish market. It is a buying market. Remember that. The bull, another word for a bullish market is a buying market. Another word for a buying market is a bullish market. Why was it named after the bulls? You know, bull, cow, ram, however you want to illustrate this. How does the bull attack? The bull goes back, takes his head down, and then swing all the way down, up. That's how they strike. That's how they fight. That's how they attack. So it is that movement, down, up, upward movement. That is why it is named after the bulls. It is a buy. In other words, when the market, the value of that pair is going up. The value of that commodity, the value of that stock is going up. It is a bullish market. You can see here that is the bullish market. Now, unlike the US dollar against the Nigerian naira that I know, that we know very well, it has always been bullish. It has always been going up. That is why I don't even think I've never seen anybody that says in the forex market that trades the Nigerian naira against the US dollar, because it's one direction and then it is very slow before it even moves to another. Even though we are sure it's going to continue going up, we don't know when. So it is very slow. Unlike the US dollar against the Nigerian naira, the euro against the US dollar continues. It's always moving. Today it's going up, tomorrow it's coming. Even on one day, it can go up and come down. So that continuous fluctuation, that is how you make money. For example, if this hour now it is going up, you should be buying to make money. In the next 2 hours, it starts coming down. You should sell to make money. That is it. That's how simple forex is. Buy and sell. The bull and the bear. Now I've talked about the bull. The bullish market, once again, is a buying market. It's a market that is going up in value. Well, for example, gold right now, if you can browse about it, today is 10th of 4th. Gold has been a bullish market all through this week. Gold has been buying. The value of gold has been going up. So from Monday, if you hadn't been $100 account and you had placed a buy on gold, by now you would have made over $100, probably $200. It depends on how much your capital is. You can make as much as 1,000 US dollar. It depends on how much your deposit, your account size. Simple as that. So once again, a bullish market is a buying market, a market that is going up. That is a bullish market. So for example, someone tells you, bro, tomorrow, what commodity can I use now? Groundnut. As I told you, you can buy and sell groundnut in the market. They tell you, or any currency, Australian dollar against the US dollar has been bullish this week as well. It has been going up. It has been going up. It's bullish market. Now, let me run through the bearish market. Now, a bearish market is a selling market. Is a pair or a price or a commodity, the price of a commodity that is going down. We don't have bears in Nigeria, but I'm sure we all know the animal called the bear. It's a wild animal. It strikes. How does the bear strike? It strikes from up, down, from up, down, up, down. So that is why a market that is going down is called a bearish market. It is a bearish market when it is going down. For example, right now, I'm trying to make very, very clear examples. Right now, the US dollar against the Canadian dollar is a bearish market. It is going down. Price is coming down. That is it. So remember, a bearish market is a selling market. Is a market that is coming down. That is it. So how do we now, let me make further illustration on the buys and the sell. So basically what happens in the market is you're buying one currency, you're selling the other currency. Now remember, these currencies are quoted in pairs. Look in my slide now, we have GBP against the US dollar. Now, once you are buying GBP against the US dollar, it means you're sticking your money to the market that the Great Britain pounds will do better than the US dollar. So the Great Britain pounds will appreciate in value against the US dollar. So it will continue going up. And as long as it continues going up, you are making money. You are making money. And then so by doing this, you're expecting that the Great Britain pounds will continue to increase in value over the US dollar. But as I said, other currencies, except for the Nigerian naira that has been going up, they change. They change. Now, a Great Britain pounds is continuing going up against the US dollar. Now, Donald Trump might come out now and make a tweet that shows that the US dollar currency is getting strong. Maybe their manufacturing industry, perhaps maybe news comes out that they've been able to find a vaccine against coronavirus. So the US, they are rolling out their manufacturing industry. Everything is working out fine now in the US against whereas the Great Britain pounds are still struggling with coronavirus. What does that mean? That means the US economy is going to do better than the Great Britain economy. Remember, the stronger an economy is, the stronger their currency is. So immediately that information comes out, now the US dollar is now stronger. So what does it mean? Instead of it buying, now it starts selling. You will remember it was bullish, it was a buying market, but now it is a bearish market. That is it. Currencies are traded in pairs. Always remember that. Now, if you are trading a particular commodity, you're trading GBP, USD. Now, if your analysis, we'll all get there, we'll know how to do analysis together. If your analysis is that Great Britain pounds do better than the US dollar, you are buying. And you are putting your money in Great Britain pounds. It's going to continue going up. Now, if your analysis is US dollar is going to do better against the Great Britain pounds, you sell. Really, you press the sell. Now, selling means the US dollar is going to do better. It's going to beat Great Britain pounds. So, and as long as the value continues, the price, the quote continues to go down, you are in money. Now, let me run through the charts. Let me show you a live chart, what it looks like on the chart. Each currency has its own chart. I believe we can all see this screen. Let me quickly remove all of this. These are what I use for analysis, but we haven't gotten there, so I have to delete this. So this is what the chart looks like. These are the various prices. So if I open the US dollar against the Nigerian naira now, what you'll be seeing here, these prices are, I think right now it's about 360 or thereabouts. So you see the different prices on this place. So right now, what this chart shows you now, this is the US dollar against the Canadian dollar. So now if you want to go to, if you want to go to US from Canada, you're a Canadian citizen, you want to go to US, this is the value of the US dollar against the Canadian dollar, 1.39575. So this is basically exchange rate, different exchange rates. So right now, this is what the exchange rate is right now. This is it. So this is it. This is what the chart looks like. Practically, these fluctuations in price, this is what you are trading. So you can see this is coming down. A market that is coming down is what? Is a bearish market. Is a bearish market. So now, what does this mean? What does this, as it's coming down, what does it mean? It means that the value of US dollar against Canadian dollar is coming down. In other words, Canadian dollar is doing better than the US dollar. But before now, what was happening? It was going up. The US dollar was doing better against the Canadian dollar. You can see it was going up before now. So what does that mean? If you had been buying at this point, you would have been making a lot of money right from the comfort of your house. you'd have been making a lot of money. And then now it gets to this point and decides to, the Canadian dollar now is doing better than the US dollar. So this is where it is right now. This is the current price, the current exchange rate of US dollar against Canadian dollar. It is that simple. Now remember to subscribe to this channel, hit the bell icon, hit the bell icon below, and so you get notified when we post out the next presentation. I want to take this gradually, step by step, so I'll make sure you understand it. Now the comment section is open now. I had some issues with it, but it's now open, so you can click on it anytime you want and ask questions. Ask questions. I'll readily answer you. So this is it. This is what the chart looks like. Perhaps in my next class, I'll see if I can open US dollar against the Nigerian naira. So you see, since we all are used to the Nigerian naira, so you see it practically. You understand that these are the different values, the different prices. So this is what the US dollar against Canadian dollar is right now. So I wish I could open another. Let me show you what the Great Britain pounds against the US dollar is right now. It's quite messy. I have to set it up. But well, because of time, let me just show you how I've set it up actually. But so this is what the value is right now: 1.24797. This is the current exchange rate of the Great Britain pounds against US dollar. It is that simple. It is that simple. So right now, what is happening? The market is going up. So it is a bullish market. This is a bullish market. And so the Great Britain pounds is doing far better than the US dollar. Thank you. I'll have to end the class here. Please hit that button, subscribe, so you get notified when I release the next video. Thank you very much. Do have a lovely day and remember to stay safe. God bless.